Welcome back to the Cloaked Capitalist. It's been a wild few months in the market since my last update, so let's not waste any time and jump right into it. First up, stocks I've sold since the last video. I decided to close out my position in Apple. Here's why. It was a relatively small slice of my portfolio, and while Apple is an incredible company, it's already a $3 trillion giant. I felt that capital could be put to better use in a smaller company with more room to grow over the next few years. Plus, when someone like Warren Buffett starts trimming his position, cutting it in half, no less, it made me take a closer look. Combine that with the broader uncertainty swirling in the market, and I decided it was time to lock in my gains and move on. Next up, Supermicrocomputer. This was a newer position I took, but with the recent market volatility, it took a sharp downturn not long after I got in. I decided to cut my losses early and move on, and honestly, I'm glad I did. It's now trading about $8 below where I sold it, so the decision saved me from an even deeper red. I also exited my position in Intel. At first, I opened the trade based on some promising news at the time. But after taking a closer look at their financials, I realized it wasn't a position I wanted to hold long-term, at least not right now. Revenue is on a steep decline, and they've slashed their dividend. Until I see a stronger outlook or a clear turnaround, I'm staying on the sidelines with Intel. And lastly, Dollar General. I entered this position after it took a steep dive on the charts. My initial plan was to sell into a bounce, but I was also comfortable holding it longer term since it's a fundamentally solid value stock. As the broader market started turning bearish, money began rotating into more defensive names, and sure enough, Dollar General started climbing while much of the market was dropping. With volatility still high and uncertainty lingering, I took the opportunity to lock in a small profit and close the position, for now. Now let's move on to what I've been buying. One of my recent additions is TSMC, Taiwan Semiconductor. I see it as a smart play on the eventual rebound of the tech sector. Their financials are rock solid, and their customer base is about as strong as it gets. Apple and Nvidia alone make up over 35% of their total revenue. And let's be real, microchips aren't going anywhere. As the backbone of everything from smartphones to AI, semiconductors are only becoming more essential. So TSMC feels like a solid long-term hold with real upside as tech stabilizes and starts to rally. If we get a lower dip, I will be looking to add to this position. Another stock I've been adding is PayPal, and honestly, I think it's a hidden gem just waiting for the market to catch on. Despite the recent pullback, PayPal's fundamentals are strong. Revenue has been steadily climbing, cash flow and net income are trending upward over the long term, and they still hold a dominant position in the online payment space. Right now, it feels like a case of sentiment being disconnected from reality. At these levels, I see PayPal as a high-quality company trading at a discount, and I'm happy to accumulate while it's out of favor. As I've mentioned in previous videos, I'm a big believer in Trulieve and the broader cannabis sector. Even though my position is currently down over 40%, I'm staying true to my long-term outlook. With the market trending downward recently, I took the opportunity to grab another 100 shares. The way I see it, the cannabis industry still has major tailwinds ahead, especially if we see progress on federal reform. It's a volatile space, no doubt, but I'm willing to ride out the noise for what I believe could be serious upside down the road. Symbotic is another company I'm holding with long-term conviction, something I've talked about in previous videos. They specialize in warehouse automation through advanced robotics, and I see massive upside here as more companies turn to automation to cut costs, reduce payroll liabilities, and streamline operations. Revenue growth has been impressive, and their debt is so minimal it's barely worth mentioning, always a good sign. This one was actually brought to my attention by my advisor, and after digging deeper, I saw the potential myself. If the price dips further, I'll be looking to add even more shares. Before we wrap up, let's quickly go over my ETF positions. In my last video, I mentioned I wouldn't be adding much to the market outside of minimal contributions. But since then, we've officially entered correction territory, and that's changed my approach a bit. I've started picking up as many shares of VU as I can afford during this pullback. I've also added a solid amount of DGRO, and grabbed a few shares of SPY inside my Roth IRA. As Mr. Buffett famously said, be greedy when others are fearful. And with sentiments still shaky, I see this as a prime time to lean into quality. That wraps up this month's portfolio update. Thanks for tuning into the Cloaked Capitalist. As always, I'll keep tracking my journey toward $1 million portfolio and sharing everything along the way, wins, losses, and the lessons learned in between. If you're enjoying the ride, make sure to like, subscribe, and drop a comment with your thoughts or questions. I read them all. Quick disclaimer before I go. I'm not a financial advisor. This channel is for entertainment and documentation purposes only. Always do your own research before making any investment decisions. Until next time.